I'm Anna, the top woman trader in the world, and I assist inexperienced traders in generating profits. In this video, we'll discuss how to set realistic trading goals. See you after the intro. Good morning, traders! Before we dive into the art of setting realistic trading goals, I have something important to tell you. If you want to see how to put all these great theories we're about to discuss into practice, don't forget to check out my courses. There you'll see how to trade on stock indices and commodities. It's like sitting next to me as I try to tame these financial bulls and bears, but without the risk of me stealing your coffee. Let's start with the mega session on the hottest topic in trading: how to set realistic goals. Get ready because it's going to be a long and exciting journey, just like a day of trading in the markets. First of all, let me say one thing. If you are here thinking you will find the magic recipe to become a millionaire overnight, well, I'm sorry to disappoint you. Trading is not a lottery ticket. It's more cultivating a garden. It takes time, patience, and yes, even a bit of sweat. But I promise you that by the end of this talk, you'll have all the tools to make your trading flourish. So, why the hell are these blessed goals so important? Well, think about it for a moment. Have you ever tried driving without knowing where you're going? Well, trading without goals is exactly like that. You will find yourself going in circles, consuming a lot of fuel, and in the end, you will be exactly where you started. Not very efficient, right? For example, imagine starting to trade without a clear goal. You might find a stock that looks promising, let's say Tesla, and buy a few shares. The price goes up 5% and you will feel like a financial genius. But then, what do? Do you sell it? Do you keep it? Without a goal, you might end up holding it too long and see the 5% gain turn into 10% loss when the market moves against you. Goals are your compass in the stormy sea of financial markets. They keep you on the right course when the waves threaten to sink you. And believe me, there will be days when you're feeling like you're on the boat in the middle of a hurricane. Let's take the market crash in March 2020 during the COVID-19 pandemic as an example. The S&P 500 fell 34% in just over a month. Many panic-stricken traders sold everything, realizing huge losses. But those who had clear goals and a long-term strategy saw this as a buying opportunity. And guess what? By August 2020, the index was back to pre-pandemic levels. But that's not all. Goals are also your shield against the sirens of the market. You know, those voices that whisper to you, "Hey, look at these stocks that's rising like a rocket. Buy it now." With clear goals, you will be able to plug your ears and stay on your path. Think about what happened with GameStop in 2021. The price went from about $20 to over $300 in a few weeks. Many traders without clear goals jumped on the bandwagon when the price was already high, hoping to make easy money. And you know how it ended? The price crashed as quickly as leaving many with heavy losses. And then there is motivation. Guys, trading can be an emotional roller coaster. There will be days when you feel like kings of the world, and others when you want to hide under covers and never come out again. These where your goals come into play. They're like that friend who pats you on the shoulder and say, "Come on, get up and try again." Now let's talk about something that scares many traders: stops. You know what? Stops are like vegetables when we're kids. We don't like them, but we know they're good for us. They happen to everyone, okay? Don't let them get you down. Actually, use them as fuel to improve. Let me tell you a story. There was a trader, let's call him Mario. Mario hated stops. He saw them as a sign of weaknesses. And one day he entered a trade on euro-dollar, convinced that the euro would appreciate. The market started to move against him, but Mario thought, "No problem, it will recover." Spoiler, it didn't recover. In the end, Mario lost 50% of his account. Moral of the story: stops are your best friends. Embrace them. Now I know what you are thinking, but how do I know if I'm improving? Great question. This is where performance evaluation comes into play. It's like doing a checkup on your trading. Compare your results with the goals you set for yourself. If you had a goal on plus 10% in a month and you did plus 15%, congratulations, you are doing great. If it said you did minus 5%, well, it's time to understand what you didn't work. For example, imagine you set a goal for 2% profit per month. After 3 months, you do the math and discover that you earned 1.5%, 1.8%, and 2.2%. You're on the right track, but if your results were 0.5%, -1%, 1%, that would be time to review your strategy. And here comes the beauty. Novice traders usually make opposite mistakes. The first is having so much fear that they don't enter when they shoot and run away before the target. It's like going to a party but staying in a corner all evening without talking to anyone. What's the point? Imagine you've done an in-depth analysis on Apple and decided it's a good time to buy. Your target is a 10% gain. You buy at 150 and set a sell target at 165. But as soon as the stock reaches 155, you panic and sell. Yes, you made a profit, but you left money on the table. The other mistake is the exact opposite. They feel like invisible superheroes stay in the market too long, with targets that only exist in their dreams. It's like thinking you can drink 10 beers and drive perfectly. Spoiler, doesn't work that way. Let's take the example of Bitcoin in 2017. Many traders saw the price rise from $1,000 to $20,000 and thought it will continue like this forever. They ignored all the overbought signals and stayed invested. When the price crashed to $3,000 the following year, many found themselves with huge losses. But don't worry, there is a solution. In my memberships, for example, we analyze trades together, especially those that went wrong. It's like doing an auto spy of your trading, a bit macabre but very useful. Imagine being able to see exactly where you went wrong, what made you make that decision, and how you could do better next time. It's like having a trading time machine. If instead you want to do it on your own, I have some advice for you. First of all, define your SMART goals. No, I'm not talking about how smart you are, although I'm sure you're very smart. SMART is an acronym, and I explain what it means. As for specific, no, I want to earn more. This is a vague as I say I want to be happy. Instead, aim for something concrete. I want to increase my capital by 10% by the end of the year. See the difference? The second goal gives you a clear direction. M for measurable. You must be able to monitor your progress. I want to become a successful trader can be measured. How do you know what you've succeeded? Instead of I want to beat the market benchmark by 5% a year is measurable. At the end of the year, you'll be able to see the black and white if you made it. A for achievable. Be realistic. Come on, if you're beginning, aiming for plus 100% in a year is like wanting to climb Everest in flip-flops. You might succeed, but the odds are not in your favor. Better to start with more modest goals, and then raise the bar as you improve. R for relevant. Goals must make sense to you. There is no point in aiming for something you don't really care about. If your dream is to buy a house, it doesn't make sense to have buying a Ferrari as a goal. T for time-bound. Set a deadline. I want to get rich doesn't make sense. When? In a year, 10, 100. I want to accumulate $10,000 in 5 years is a whole different story. It gives you a clear timeline and allows you to break down the goal into intermediate stages. Let's make a practical example of a SMART goal in trading. I want to increase my trading account by 20% in the next 12 months, making an average of 10 trades per month with a risk-reward ratio of 1 to 2. This goal is specific. You know exactly what you want to achieve. Measurable, you can track your progress month by month. Achievable, a 20% annual returns is ambitious but realistic goal. Relevant, it's up to you to decide if this goal aligns with your broader financial goals. Time-bound, you have a clear 12-month deadline. Let's move on to the risk profile. Guys, here you need to be honest with yourself. It's like when they ask you if you're doing good at dancing. Some of you will say yes. Even the last time you danced, you made 3 people fall and knocked over a table. Others will say no, even though they're actually real. Others will say no, even though they're actually real John Travoltas on the dance floor. In trading, it's essential to know your risk profile. If the idea of losing gives you hives, maybe trading isn't for you. Perhaps bonds are more suitable. There's nothing wrong with that. Better to sleep soundly than spend sleepless nights looking at charts. For example, if you feel uncomfortable with a 5% loss of your capital, then maybe you should consider more conservative trading strategies. You might focus on stable blue chips instead of volatile penny stocks, or use tighter stop losses. If you are ready to risk a few $1,000s for potentially higher gains, then welcome to the club. Trading is like a roller coaster. There are ups and downs, but in the end, it's exhilarating experience. And remember, there is no one-size-fits-all recipe. Everyone has their own style. There are those who do stock picking spending hours studying company balance sheets as if they're thriller novels. There are those who do spread trading on commodities, trying to predict whether the price of what will rise or fall as if they had a crystal ball. For example, a trader might specialize in pair trading or correlated stocks. They might trade on the Coca-Cola-Pepsi pair, go long one and short on the other based on their analysis of which company will perform better in the short term. And then there are crazy people like me who trade on European indices. I can make plus 5% in a day, but also minus 10 if things go wrong. It's like bungee jumping. The adrenaline is through the roof, but it's not for the faint of heart. A golden advice: break down your goals. Do you have an annual target? Good. Break it down into weekly and monthly goals. It's like eating an elephant one bite at a time. If your goal is to earn $24,000 in a year, it means you need to make $2,000 a month, $500 a week. Seems much more manageable, right? Here's a practical example. Annual goal plus $24,000. Monthly goal plus $2,000. Weekly goal plus $500. Daily goal plus $100. Considering 5 trading days in a week. With this breakdown, you can easily monitor your progress and adjust your strategy if necessary. And don't forget to monitor your progress. If for 6 months in a row you don't reach the target, maybe it's time to adjust your aim. There's nothing wrong with readjusting goals to reality. It's like when you go on a diet. If after a month you haven't lost even a gram, maybe it's time to change strategy. Finally, don't be afraid to fail. Stops are part of the game. The market is the best teacher you can have. Even sometimes its lessons hurt. The important thing is to learn and not get depressed. Psychological form is fundamental in this job. Let me give you an example. I knew a trader, let's call him Luigi. Luigi had started great, making plus 20% in the first 2 months trading on euro-dollar. He felt insinkable, then a series of losses came. Luigi got demoralized, started trading emotionally, taking ever greater risks to recover. Result? He lost everything he had earned and even more. The lesson? Losses are part of the game. The important thing is to learn from them and not to be overwhelmed by emotions. Remember, trading is not a lottery ticket. It takes time, patience, and dedication. Don't accept to become millionaires overnight. You're more likely to be struck by lightning while winning the lottery. Focus on improving your skills, make informed decisions, and results will come. And for heaven's sake, create a routine. Consistency is the key to success. Wake up at the same time. Do your market analysis, plan your trades. It's like going to the gym. If you go once in a while, you won't see results. But if you go regularly, you will eventually see muscles popping up. Here's an example of a daily trading routine. 7 a.m., wake up and review financial news. 8 a.m., chart analysis and identifications of potential opportunities. 9 a.m., market opens, executions of planned traders. 12 p.m., review of open positions and adjustments if necessary. 4 p.m., closing of day positions and transformer analysis. 5 p.m., planning for the next day. Following a routine like this will help you stay disciplined and focused. One last thing, risk. It's like air for us traders. You can't avoid it, but you can learn to manage it. Protect your capital as if it was your baby. Never risk more than 2% of your capital on a single trade. It's like playing poker. Even if you have a good hand, you never bet all your chips on a single hand. Let's make a concrete example. Suppose your trading account is $10,000. 2% of this amount is $200. This means you should never risk more than $200 on a single trade. If you are trading stocks and want to buy shares of a company that costs $50 per share, you shouldn't buy more than 4 shares. 4 multiply $50 is $200. This way, even the trade goes wrong, you won't lose more than 2% of your capital. Well guys, that's all for today. I hope these tips and examples help you set realistic goals and achieve success in trading. Remember, the market is a marathon, not a sprint. So lace up your shoes and start running. And if you feel overwhelmed, remember, Rome wasn't built in a day. Every great trader started somewhere. Think about Warren Buffett. He bought his first stock at 11 and made his first million at 30. It took years of study, practice, and patience. The important thing is to start and keep learning. You can start with a demo account to practice, without risking real money. Many brokers offer these offers. It's like training with plastic waste before moving on to real ones. And guys, remember, what I told you today is just the tip of the iceberg. If you really want to master the art of trading, there's nothing better seen than a professional at work. That's why I invite you once again to join my memberships. There you'll not only see how I apply these strategies in the real world, but you'll also learn how I manage risk, how I analyze the market, and how I make decisions in real time. It's like having a personal trading mentor, but without having to leave home. And for those of you who want to accelerate your learning path, don't forget my courses. From trading psychology to advanced technical analysis, we cover everything you need to become successful traders. Think about it. You can spend years learning from your mistakes, or you can learn from mine and save time and money. The choice is yours. So what are you waiting for? Start today. The best time to start was yesterday. The second best time is now. And if you really want to understand how I handle this situation in daily practice, my courses are just what you need. I'll say exactly how to recognize signals on the charts of European indices and commodities, how to set up proper money management, and how to protect your capital. You'll get an in-depth look at how I apply these strategies in the real world, with practical examples and real trades.